Environmental, social, and governance, or ESG, is a framework that evaluates companies or countries based on their alignment with environmental, social, and governance factors. It has gained widespread popularity in recent years and has become a globally accepted framework for allocating capital. However, there are some criticisms of ESG. Some argue that the ESG evaluation process is arbitrary, opaque, and centralized, leaving room for corruption. They also claim that ESG is similar to a social credit system like the one used by the CCP, which determines an individual's access to goods and services, and serves as a way for the ruling class to consolidate capital and allocate resources. Critics also argue that ESG can destroy wealth on a national level, citing the example of Sri Lanka, whose ESG score was high prior to its economic collapse. Economist Milton Friedman believed that there is one and only one social responsibility of business to use its resources and engage in activities designed to increase its profits. Many investors save money for retirement and expect their investments to grow so that they can retire comfortably. It is argued that manipulating the capital allocation process in order to meet ESG objectives is wrong because it should be allocated to the resources that will generate the highest return, which will increase competition and drive down costs, ultimately benefiting consumers. This approach has had a positive impact on society and has been successful over the past 200 years. Corporations should focus on making profits within the bounds of the law. However, there are potential problems with ETF voting. ETF providers own the underlying securities and wield the voting power, while the investors in the ETF own shares in the ETF itself. ETFs can build a significant block vote from the investing inflows of many small investors, which allows them to influence companies despite their passive reputation. This concentration of voting power means that the interests of individual investors are not always represented, leading to potential distortion of the corporate governance ecosystem. Additionally, the influence of activist investors and the misalignment of interests between ETF providers and individual investors can also be issues. In conclusion, while addressing climate change and promoting social good are important, ESG may not be the most effective way to achieve these goals. It is important to consider the potential drawbacks and conflicts of interest when implementing ESG. Thank you for watching.